Do most of you not hate nepotism everywhere? When you look at the film industry, or are thinking yourself about the reason you do not want to join litigation, the main reason for most is a lack of support from your family members. In the business world also, there can be many such persons or companies which are related to each other. What does being related exactly mean? You can be the relative of a director in the company, another company of one of the shareholders, etc. There are many different ways of that relationship being relevant, as it can clearly affect the judgment of the company, its board of directors, or the shareholders, causing them to be biased and favor that related person. A transaction between these parties, or to put it simply, a related party transaction, makes it possible for the people in control of decision making of a company to abuse the transactions for personal gains and are therefore strictly regulated under most regimes and regulators of our country as well. Related party transactions, or RPTs, can be a transfer of resources, providing services, or undertaking obligations between two related parties, irrespective of whether a price is being charged or not. Let us take an example to understand it better. Imagine you are an investor in a restaurant company ABC Limited being run by Mr. Sharma. Now, Mr. Sharma purchases raw materials like kitchen equipment from a company owned by his son. Now, clearly, you can sense the conflict of interest in this transaction. As a shareholder in ABC Limited, you would be wary that is Mr. Sharma buying this kitchen equipment at the right price, or is he overpaying to his son? Is there some biasness? As a result of that, these kinds of transactions need to be disclosed to the shareholders and an approval must be taken from them. Now we have understood the concept of related party transactions. What are the possible problems which have emerged usually in such cases, and how have investors been defrauded? Number one, as we have discussed in the previous example also, is unfair pricing. Now, ABC Limited may pay an inflated price to Mr. Sharma's son's company, harming the shareholders and directly reducing company profits. Number two, there is a clear risk of fraud. These transactions can be used to divert company funds, manipulate earnings, or evade taxes. Now, because of this conflict of interest, different regulators have come up with their own sets of rules and regulations to regulate such transactions. Now, let us analyze some practical examples as to how related party transactions are being used by the people in power to get as much money for themselves as possible. First, it has been pointed out in SEBI reports on related party transactions that there has been the use of complex structures to carry out related party transactions. These transactions appear to be prima facie harmless. However, they are used for multiple nefarious purposes. The first is where these transactions use intermediate, unrelated parties which can further loans to related parties for benefiting that related party. So basically, adding that layer of an unrelated party in the middle prevents the transaction from being called a related party transaction. These complex structures make use of shell companies or companies that do not have any business and are just like a hollow shell of a mollusk. They use these structures also sometimes. Let us take the case of ICICI Bank, where the then CEO and MD of ICICI Bank, Mrs. Chanda Kochhar, faced severe allegations wherein she had granted a loan to Videocon, and Videocon had further transferred some money to a company called New Renewables, in which Mrs. Chanda Kochhar's husband, Mr. Deepak Kochhar, was involved. Now, this clearly had some conflict of interest and she faced some scrutiny for this. Besides using the complex web of transactions, a lot of managers allegedly in companies appoint relatives to siphon off money as salaries or payments for their services and consultations, even when that particular person appointed to the post did not provide a single service or any kind of consultation whatsoever. Thus, they end up creating fake invoices and documents to support it as well. The third usage which we have seen in some cases is a lot of owners rent out their own properties to the company and then charge exorbitant rent so that the shareholders and investors' money is siphoned off for their own personal gains and to their own accounts. So let's say the rent of the property is 10,000 rupees, they will charge 15 or 20,000 rupees and take that extra rent away for themselves. Now, coming to the legality, under SEBI regulations, they are majorly regulated under the listing obligations and disclosure requirements, or the LODR regulations. The main purpose under these regulations is to give disclosures that this kind of transaction has been undertaken. They are also regulated under Section 188 of the Companies Act of 2013, which restricts related party transactions to an extent, and thereafter also gives a requirement of a resolution to be passed for approving related party transactions. Thereafter, there is a taxation angle also with regard to how pricing would be done for such transactions. So this is where the term arm's length basis comes into picture. That is, if I would have obtained this service from a third party vendor, how much would I have paid? The same value needs to be assigned to the transaction I am undertaking with a related party as well. The companies typically show a lower value if they want to prevent paying taxes to the government. So the taxation authorities want to avoid that. Lastly, if you want to explore the further use of RPTs, you can read the case of Diwan Housing Finance Corporation or DHFL as well. This is how typically RPTs are used to divert companies' funds and for personal gains.